at ACWA Power. Thank you for joining us today, in person as well as virtually. Although I feel a little bit sorry for the people who couldn't make in person here, because I can see from the faces they loved the experience they had. Listening to the people who literally keep our planes up and running 24/7. So I hope it was a very good experience for you all. Now, that's a capital market day, as we call it. We've been talking about this for a long time. The main content of the event is going to be strategy. So for those of you who are expecting to see detailed financials, probably I'm going to disappoint you on that one. We're not going to be diving into the financial projections or financial results, which is going to come up with the year-end results, earnings call that we have. Before I introduce people, just a quick one. The format of this meeting is going to be similar to the earnings call, which means that I will request all of you to keep your questions until the end. And there's going to be a Q&A session for you as well as the people who are joining virtually. Now, together with us today, we have some familiar faces as well as probably ones that you for the first time meeting in person. I'll start with Mr. Rad Al-Sari, and Rad is our Vice Chairman and our Managing Director. Rad, may I request you to give a few words about yourself?
Nice to meet you. I met you briefly during lunch. Marco invited me today. Thank you very much, Marco. We had the board meeting yesterday at ACWA Power. He asked me to join. And Marco always gives me the same advice to keep an open mind and to keep my mouth closed. I will do that today. But I just wanted to say a quick hello, and we'll continue the proceedings. Thank you.
Thank you, Rad. And we have Marco Marcelli, who is our CEO, who is essentially running the session today. Every now and then he's going to pass the word to the relevant members of the management team. But essentially he is our guy today, and he's going to take us through the strategy in detail. We also have Abdulhamid. Most of you know him. He is the CFO of ACWA Power, and together with him we've been making some miles this year. So we've been meeting most of you in person. On the other side of the room, I have Mr. Rehan Bey, who is our head of corporate affairs, and he's also looking after sustainability and strategic as well as strategic development. Next to him is Thomas Bostrom. Thomas has actually joined us very recently, but I am sure it feels like more than probably years, Thomas. And Thomas is our Chief Investment Officer. And next to him we have Bart Bosmans. He is our Chief Technology Officer, and he is overseeing technology, generally speaking, but he's also responsible for research and development and innovation. And next to him we have Dries Berraho. Dries is our head of green hydrogen. So I'm delighted to have Dries here because he's the person who can give you insight into a lot of questions in green hydrogen, which Abdulhamid and I have been receiving all through the year. So without further ado, I just would like to give the mic to Marco, and we can start. Thank you.
Thank you. To move the slides, do I do it or do I call it there?
It's going to be
there. Okay, good, excellent. Well, welcome to everybody, and I'm very happy to be here with you. It's been an exciting almost 9 months. Really, a lot of things happen. It feels like 9 years, but you know how things go in the region. So I think it's not just ACWA Power. So let me start by telling you and reiterating what Osgur said. I think that the goal today for me was really to share with you basically the thought process and the rationale for the strategy that we launched in June, and we're now delivering. We will not give you a lot of numbers. We will give you just a few that I think are relevant for you, and we can discuss later on in more details. So ACWA Power, one of the things that we started to do is to communicate more and better what we do and what we are. Because when I arrived, I realized that no one, not even myself, knew that we are the largest private water desalination company in the world. So that is one big theme that we are developing right now, and we will talk about that. And we're the largest private power producer in the Middle East, which we will decline in a few different themes. So we're one of the biggest companies in the world in energy transition, which includes battery storage. That is another part that is not very well known. And we're the first mover in green hydrogen. among other things that are the renewables and the combined cycles and flexible generation that we do. If we can move to the next slide, you see here a snapshot, basically, of what we are today. So close to 55 gigawatt under control. You know our definition. So basically, it's the asset in operation, under construction, and for which we have signed PPA. That means that we're going to start construction soon. So this is like 100% certain of delivery. We have a much bigger pipeline beyond that, and we will talk about that. 7.6 million cubic meter of water per day of desalination, which, to give you an idea, in the 4 countries where we operate today, we fulfill the needs, the demand of about 20 to 30% of the population. That is Saudi Arabia, here the Emirates, Oman, and Bahrain. 1.2 plus million tons of green ammonia, because we have the 1.2 from NEO. Plus, we just launched a second project in Uzbekistan. It's a smaller project. It will be a few tens of thousands in the first phase, but we have already launched a study basically to see how we can export then the green ammonia into Europe. 5.3 gigawatt hour of battery storage, which makes us probably the largest battery storage operator in the world. That is as much as all of Europe installed in 2022. And we started to do this basically only 4 years ago, 3 years ago. Total asset under management is 84 billion. I think it was 76, 77 when I arrived. So it gives you already the idea of the pace of growth. And this will be the key figure for which we will give you the target by 2030. And we'll explain to you also why we don't break it down into more targets. 45% of the capacity today is renewable, and it used to be practically zero only 7 years ago. I mentioned larger private producer in water desalination, the first mover in green hydrogen, energy transition. But I think the 2 last points are very important. So we're the guys who took down the cost of renewables by 80% over the last 15 years. We achieved still the world record of the cheapest power from PV in Saudi Arabia. And in water, we achieved similarly the lowest tariff in the world at a plant near here, Hassian, that will start construction imminently in a few weeks. 36.5 cents per cubic meter. And the last point is also very important, and if we can move to the next slide, is that we are a global champion under the Saudi program. And I think that here it represents, and actually this is what, I started to look at myself, to learn about the company and see, but what is the recipe? What should we do more? What should we do differently? And I think that you can see these 3 phases. So the first one was a domestic company until, let me say, 15 years ago, when the first opportunities were in Saudi Arabia, and then you grow, you win the first projects, you position yourself, you start building the equity that allows you then to go internationally when the opportunities in Saudi Arabia were not so big. And you see that the growth in the next decade was basically driven by this. But the big acceleration, what really made ACWA Power what it is today, is Vision 2030. So the fact that Saudi Arabia put in action this plan to decarbonize the economy under Vision 2030 is one of the pillars, to promote private entrepreneurship. Otherwise, this would have gone to a private public player like SEC or SWCC. Instead, they said we want to foster a private economy. And you see that that is when we really made the big jump and exploded. We are now today responsible to delivering the PIF program. That is basically this program to build 70% of all the renewable capacity in Saudi Arabia. If we move to the next one, and by the way, this size, this scale is also what enabled us today to go abroad with a different way than we had before. And to be also kind of like hand in hand with the government in the countries with the biggest relationship exposures and bilateral trade. How did we get there? I told you about the big reduction in cost that we achieved both in power and in water. But I think the other is that we are increasing it. And I think after you start from the first phase of your life, where basically you're focused on establishing yourself, now we are focusing on changing the world. And I think these examples here, like the Hassian IPP here, not far from here, on the coast, to convert it from coal-fired to gas-fired, talking with the local authority, the local off-taker, to say, why don't we change it along the way? And so this is saving 30 million tons of CO2 by 2030. The second one is Shuaibah, which is an independent water producing plant in Saudi Arabia, where it used to run on oil and with a regular traditional condensation, basically distillation process, which was converted to reverse osmosis powered by electricity, which enabled to reduce the consumption by 22 million barrels and almost 10 million tons of CO2 equivalent. So this is increasingly what we want to do. The presence in green hydrogen is also part of this. The Dries will talk to you about that a little more in detail. But what we see is that, and we were just at COP, it's not that we have to talk about renewables today. Renewables are happening as much as you can. If you don't do renewables, it's simply that you need either a complement in the system, or you don't have enough capacity or enough land. But no one is questioning that renewables are the cheapest, the safest, the fastest, and so they're going ahead. What we need to focus on is the hard-to-abate sectors, for which it is an emerging industry, and that's where we're focusing on today, to see if we can replicate, and with the ambition to be the number one player like we have done in these other technologies. If we move to the next slide, this is the example. There are a couple of examples that I would like to show you with concrete pictures, because I think this is really telling. So this is the Red Sea project, and Bart was really at the center of it, because it's all about technology. This is not about construction. This is the largest off-grid, fully sustainable solution in the world. It's 500 megawatts of fully renewable energy, 400 megawatts solar, and 100 megawatts of backup biofuel engines, together with 1.2 gigawatt hour of battery storage, to ensure that basically you have power and water and wastewater treatment 24 hours a day. So by the way, this means that the reverse osmosis plant there for 32,000 cubic meter per day is fully 100% powered by renewable energy, which I think is also another big record in the world. The first resort just opened, 6 Senses. It's working fine. We're still feeding the whole construction camp and living quarters for all the staff. And the next 2-3 resorts are going to happen in the spring. So it is really there. But what I want to focus on is this picture here, that basically shows one solution that we developed with the whole sustainability program of the Minister of Energy and Red Sea Global. And basically, it takes all the wastewater from all the resorts, channels it to these pools, to these ponds, where basically all the nutrients are left there. And we grow mangrove wetlands. These are 20 hectares of that. And you see that there is room for expansion. It's part of the Saudi Green Initiative. So basically, we're turning the waste into green. And then the rest of the water goes to the nursery that will be used to provide the plants and the trees for the landscaping of all the resorts. 30 million plants between now and 2030. So if you consider that the whole of Saudi Green Initiative is 1 billion trees, this is a pretty significant contribution. The next one is green hydrogen. Well, this is a rendering. Next time we can show you actually the physical pictures of the progress. I went there in July, and it's incredible. And you see a lot already going on. The wind turbines, where the first wind turbines were delivered to site about a month ago. They're starting to be installed. The solar panels and the solar farm basically is going on. And then you see basically at the site on the coast already the foundations and the steel structures of all the main buildings, the tanks for storage that are coming off the ground. This is the largest project in the world fully dedicated to export in green hydrogen. And I would say probably it's also one of the largest, or if not the largest, green hydrogen project in the world, because to give you an idea of the size, the United States just inaugurated the largest plant in the United States for green hydrogen. It's 3 tons per day production. This one is 600 tons production per day. So it's 200,000 people. If we move to the next slide, this is the long-term trajectory for us, a net zero by 2050. I know that we have not yet provided a lot of details of how we're going to reach it. I think that the view that we have is, first, we're going to do, and that's something I also picked up also at COP, that I think we're starting to get pragmatic about the energy transition. I come from Europe, many of us come from Europe, but we saw the disaster that we made with energy policy in Europe with Russia, where basically to face an issue in the system, a geopolitical issue, you had to restart coal. And basically you had energy that was more expensive and more polluting than before. So before we focus on, I need to be net zero soon, let's see the trajectory. So the trajectory for us is the next 30 years, where we say, first, we do all the renewables we can. And we have a big pipeline, we will tell you a little bit about that. The second is we do combined cycles where they're needed. So it's not that we're going to go to a country and push them and say, I'm going to need a combined cycle for you. But in the countries where you need to have this energy for the next 20, 30 years, we will continue to do that. We see that that is mainly Saudi Arabia, which is converting the oil fired into combined cycle. Uzbekistan, where we're building already 1,500 megawatt that are actually started production, and another 1,500 we expect to come in the future. We see it in Bangladesh, we see it potentially in Morocco, we see selected in some countries. It's not going to be the bulk of our portfolio, but we will continue to do it. In the meantime, we start looking at the technologies that allows us either through sequestration or then the natural end of the life of these plants, and we will address that in that way. Next. Again, we move to the strategy that we put in place. So let me start by the vision. And all these 3 points are one connected with the other. So what we said is what really made ACWA Power great is the people. And so we really need to focus on people, not only attracting, keeping, retaining, but also developing, make sure that we become really a management school. So I always say that today we need to ensure that we don't have too much attrition, but as we grow, it's good to have attrition because it means that people take your people because they're the best. So we have to build a system that will continue to generate the talent and will attract the talent. The second is to become more recognized as a thought leader in the industry. We have done all these things that I described and much more, but not a lot of people know, particularly outside of this region. And I think maybe some of the recent stock price came from a little better communication that we have done and more focus, particularly on water, I think. It's not that we do it for the stock price, but we do it, again, because we want to attract people so that they come and they make us better, bigger, and more successful. And the third one is all these, if I'm recognized and if I have the great people, then naturally I am the best person to offer growth, partnership for growth in all the countries where we operate, which at the same time is what feeds the fact that if I create opportunities for growth, people will come to me. And if I do a lot of things, then of course I'm always innovative and I will create opportunities to position myself in the industry. So that's why these 3 people, the recognition and growth are the 3 main things that we're working on right now, and they all feed into each other. Next. And by the way, I would like to add one thing about people, because we recently had a couple of nights ago, a nice dinner to celebrate Paddy, who left the company. And so we recognize everything that he has done. It's been really a remarkable success, I think, and this is something that I'm sure that it will be told in history books in the coming years. But then we reflected and we say, listen, we are still successful. We're still very, good performance. We win, we grow, we're recognized. But if you look at us, I mean, there's basically only Abdulhamid who was here 5 years ago in the management committee. So that means that we're strengthening the organization to go beyond the individuals. And I think that is a big part of what we are trying to do as a management team right now. If you want, is to make each one of us redundant potentially by strengthening the organization, both organizationally and with people that we attract. So all that translating to this, which is probably the only and most meaningful number that we will mention, is this $250 billion. So basically, it's tripling the size from where we were early in the year. In these 4 verticals, which is one, renewable, the second is water desalination, the third is green hydrogen, and the fourth is flexible generation. As I mentioned, we do battery storage. Today, what is battery storage is mostly connected to the renewable generation. But in some countries, selectively, we will see that there might be an opportunity, so we might pursue it also as a standalone business. We elected not to give you specific details about what is the ambition in each one of these technologies. And the reason is that we want to maintain the flexibility. So of course we follow the market. So that we're gonna do a lot of renewables, that's clear. That we're gonna do a lot of water desalination, that's clear, but it's a smaller industry. So of course, if you're very successful there, you could be, a higher number or lower number depending on how the industry develops, which is even more the case for green hydrogen. So the fact is we have a total capital allocation that we have tentatively done, but then it depends, of course, particularly for some of these industry, depend on what pace it will follow in development. We will work in 4 main regions: Saudi Arabia, which will continue to be at least 50% or 60% of our investments. China, where we build on the fact that we have been there for 15 years with partners. We have procured more than $30 billion. They invested more than $10 billion in our projects. So the relationship is deep. And so we're going to grow there. And I think that could be a significant portion of our 2030 exposure. And then we will continue to work basically in Middle East, Africa, so the rest of the Middle East and Africa, and in Central Asia, where we will have a small focus. We will continue to develop organically, but for Africa and Southeast Asia particularly, we will also look for consolidation. So we will increasingly look for acquisitions if they're available at the right price, because some of these regions are very small, fragmented, slow. And so to become material, you need to be open to this. Sometimes it's also a good proposition for consolidation in your markets. But if you think about it, I always put it this way, that the biggest developer in Africa over 15 years reached 1.5 gigawatt, 2 gigawatt of capacity. The biggest, we're one of them. We do 1,500 megawatt in one project in Saudi Arabia with 1/10 of the effort, basically. So that's why scale there will be important, and that's why consolidation will be one of the opportunities. And the last point is more operational, because renewables are, very competitive, very small margins, and so we need to really sharpen continuously our approach. Then we have created under Bart this group that will take care of strategic supply and framework agreement, potentially different ways of contracting from full EPC to EPCM, and we continue to do the R&D to ensure that we remain particularly competitive. Next. I now will provide you a short and small focus on the key areas. For Saudi Arabia, as I mentioned, we're responsible for delivering the PIF program. How much is the PIF program? It's 70% of whatever we did. How much is that? The official number today is 58 gigawatt, and so our share is 42. And you see here more or less what we have done so far, which is about 14 gigawatt between assets that are in operation in construction or for which we have signed the PPA or are about to sign the PPA. and the rest we expect to be awarded in the next 3 years, so that it basically reaches operation by 2030. However, you saw already Saudi Minister of Energy who mentioned recently that 20 gigawatt will be tendered in 2024. That includes both renewables and conventional flexible generation, CCGT, but it gives you an idea that these could be higher. If you look at the demand that was, the demand growth last year was 8%. Saudi is the fastest growing economy in the G20. Besides all the giga projects, we now won Expo 2030. So I think that there are a lot of signs that basically maybe this could be exceeded. And the other point is that besides the 70%, in the 30% we can still participate. And we won 1.1 gigawatt today on the tenders that were put out. Next is Central Asia. So what we wanted to do, and here it's always a bit difficult to tell you, how much we're doing there, because actually the agreement we have with Uzbekistan government is bigger than what we show here. So what we show here is where we have already signed the PPAs, are under construction, or for some of these we already started to dispatch energy. Azerbaijan, we have 240 megawatt under construction, but again, there we have a further MOU for onshore 1 gigawatt, offshore 1.5 gigawatt. So there's more than that. We just signed the JDA in Kazakhstan for another gigawatt, where we think that the potential could be similar to Uzbekistan, simply looking at the size of the country, the economy, the population, and the potential that there is. So this is the second biggest region in the short term that we're going to invest. And interestingly, I would like to mention the last point at the bottom, because increasingly I think that we need to partner, and we partner everywhere, so we keep 30-40% of the equity at the end. But some of these, where we started to say, why don't we partner with strategic partner ahead and put together all the forces so that we accelerate what happens, what needs to happen. And so this is the project that the agreement that we signed with Masdar and SOCAR for a project in Azerbaijan, in Nakhchivan, which is the enclave. And so it will be probably for export into Turkey. So that's why we put together us, Masdar, SOCAR, which is both Azeri local, but also a large consumer in Turkey. So that's increasingly to give you an idea of how we are working and what we're targeting. Next is China. And China, I think I mentioned already, we come from first the strong G2G relationship, the strong B2B relationship. I think in meeting with all the authorities when we started to position ourselves for investments, because of course, first you enter a country, you get to introduce yourself, and you want to see if you're welcome. And I think that we're very welcome, not only by the central government, but particularly by the provinces. And I think here there is an interesting window, because the economy, of course, everybody's talking slowing down, but the desire and goal to decarbonize are extremely high. And basically that could be the way to mitigate the impact of any slowdown. And we see that a lot of provinces are really attracted by bringing foreign direct investment into their own provinces. So we think that there is a very good pipeline of opportunities in 2024, 2025. We hope that we will be announcing the first deal shortly. We already have shortlisted 5 to 8 projects, basically, that could come to a conclusion in the next year, basically. I think here the interesting model is that it's still contracted, basically, we have a long-term PPA, so similar model. The problem here, what we need to assess better compared to the usual way of working, there are 2 things that are different in China. One is that the tariff is not necessarily fixed for all the term, but it's readjusted basically on an avoided cost. And the second, there are curtailments. So these will be the 2 biggest things that in our due diligence for the projects and for the focus on which provinces we are going to target, we will focus on. But I think that altogether, it provides very interesting free cash flow, very interesting EPS, and very interesting returns compared to other areas. So I think on balance, it's exactly the great complement to a strong position in Saudi Arabia. Next, I think we're going to green hydrogen, so I'll pass it to Chris.
Thank you very much, Marco, and good afternoon, everyone. I think as Marco mentioned earlier, I think green hydrogen is definitely I would say, the market that will really take off as far as really getting access to even more renewable energy into the primary energy system. So if you look at hydrogen today, it's already a roughly 100 million ton market. So if you were just to decarbonize the current use of hydrogen, it's already a huge opportunity. Okay. Now, the beauty of hydrogen is that because we can produce it without carbon through renewable energy and the electrolysis process, now this offers the opportunity to decarbonize what we call the hard-to-abate sectors that we cannot electrify directly. And that is roughly 20 to 30% of the primary energy demand. So by 2050, if we were to project the full decarbonization of our energy system, we're already talking about anywhere above 500 billion tons of hydrogen. So again, a tremendous opportunity. By 2030, we'll likely be somewhere in between. Okay? If we are fully on track to be net zero by 2050, we'll be anywhere around 85 million tons per year. Again, a tremendous opportunity that we think that we can definitely play today. Why? We are a large renewable player. We are one of the lowest cost producer of renewable energy. And these are some of the most important ingredients to produce green hydrogen at low cost. And on top of that, we are blessed with the other resources that are required. So land in our region, like in Saudi Arabia, of course, and the geographical positioning. We are at equal distance to the key markets in the immediate term, which will be Europe and the Far East. Next, please. So a few words about the NEOM Green Hydrogen project. So this is the first project we have decided to make an investment into. This is the largest green hydrogen project in the world as well. This will be producing by the end of 2026, 1.2 million tons of green ammonia in the northwestern part of Saudi Arabia. It's in terms of capacity, we have roughly 4 gigawatts of renewable energy capacity combined with solar and wind. And with that, we are able to deliver one of the most competitive, effectively, output in terms of green hydrogen for export. Based on this project, I think we are gaining a tremendous amount of experience and know-how through effectively our engagement with the supply chain internally as well, building up our internal capabilities to be able to now go outside in Saudi Arabia and outside of Saudi Arabia to develop more projects. Next, please. So in the short term, so as I was mentioning earlier, I think that the 3 main usages today that we have for hydrogen, methanol, ammonia, and ammonia goes primarily for fertilizers and other chemical applications, and the refining business. These are the natural, I would say, attributes for hydrogen. This is roughly, let's say, 3-4% of the global emissions. That's an immediate, effectively, a replacement. So that's the infrastructure exists. It's a cost issue only. The next, effectively, and most promising item are aviation and shipping. We're talking here about 4-5% of the global emissions that will be decarbonized. Shipping is definitely high on the agenda. Ammonia and methanol can be utilized directly very soon with the technological advances. We're talking about a few years from now to have the first ships already under operation. Green steel, that's a huge opportunity again. We're talking about 8 to 9% of the global emissions that could be decarbonized with green hydrogen, and of course, heavy transportation. What is a bit more subject to debate, I would say, is maybe light duty transportation or high temperature applications. It's competing with direct electrification. It's not clear whether hydrogen will be effectively fully capturing that or not. There could be some space for it. And maybe one last item to mention is power generation. That's not the most obvious application today. I think in most of the world, we will see hydrogen entering the power business towards the latter part of the period. Simply when we have put, let's say, 90% of renewable in our system, we still need to decarbonize this last 10-15%. And this is where hydrogen will be serving as a kind of a balancing or energy storage mean on a seasonal basis. So there are a few countries where they don't have this option actually to push through that many renewables. Japan, for example, Korea, and they will be looking to procure green hydrogen and green fuels already today. And we're seeing that because they are issuing tenders to procure ammonia, for example, in order to decarbonize their power system. So Based on that realization, I think that we have been working on building a pipeline of in excess of 3 million tons of green hydrogen distributed over 10 countries. Our focus as far as countries are concerned is, of course, countries where we operate already. And in most of the countries, we already have renewable capacity under operation or under construction or under development already. Most of these countries happen to effectively as well have these characteristics that are required to be competitive on green hydrogen: land, proximity to the key target markets, and as well the renewable energy resources. In terms of regulation, we see 2024 really as a pivotal year. Right now, as we speak, Japan and Korea are finalizing the draft of their policy, the policy that will go into parliament to finalize effectively the targets for green hydrogen and the support mechanism that will be there to allow the first imports into the country. In Europe, the delegated act has been passed already during the summer. It's now being translated to law at the level of each individual country that will now formalize the obligations of each individual country to import green hydrogen. That's roughly already 4 million tons identified based on the delegated act. China, we will definitely be looking at China. China play effectively on two aspects. China today is the largest producer of hydrogen. It will be the largest market for hydrogen consumption. China will need to decarbonize. That's an obvious thing. Second, for us, China will be very much strategic from a supply chain perspective to ensure that we effectively are able to scale up and deliver the lowest cost green hydrogen possible in the world. And we'll be leveraging projects done in China as well to be able to export that competitive advantage outside. Few projects that have been announced: Uzbekistan, next phase after the one that we broke ground. Indonesia as well, we signed now a JDA for a roughly $1 billion project there, and the next one that we'll be announcing will be in Egypt. Next, please.
Thank you. So now moving to water, which, as I mentioned, we started to give a little more emphasis. This is a track record of what we have achieved today. So, and our credentials: the largest seawater reverse osmosis plant in the world, the lowest desalination tariff, which we achieved more than one time. The first in the world with the hybrid PV and reverse osmosis, which we achieved for about 25–30% of the demand, both in the Emirates and in Saudi Arabia. I mentioned reciprocal, so really in this category, not just the scale, but the individual solutions that we have developed, put ourselves at really the forefront in the industry. Next is where we see why the industry is becoming so important and why we should position ourselves. You have seen that basically the level of water stress around the world is increasingly everywhere. It's driven by climate change, by the growth of population, by network losses. And we think, by the way, that since 40% of the population is within 100 kilometers of the coastline, that could be an effective solution also for a sustainable use, because basically you don't waste all the water that today is wasted in the pipe. That, depending from the countries, 20 to 50% of all the waters that is captured. Next is reflected in these figures that basically shows that the total capacity is expected to grow 60–70% in the next 5 years. And the fact that we achieve such low cost is increasingly bringing governments or local authorities to contact us and ask for our support, basically, to develop desalination. We receive calls today from Mexico to Europe to China, is really from all around the world. Actually, to tell you more, I received one from Mongolia, and I said, "Oh, we don't have the sea, so what do you think?" And they said that we have big salted lakes, and so even salted lakes, and now we are looking potentially. There's a tender coming up in Azerbaijan. We're discussing with Kazakhstan for the Caspian. So it's really something that is picking up a lot of momentum, and we want to capitalize on that. Next. We wanted also to put a little focus on environment, because a lot of people say about desalination is not really environmentally friendly. And again, I think that we were a bit surprised by some of the statements that are made about the water desalination in general. And maybe it's because it's not very well explained. So here, to give you an idea, first is the fact that we continue to make it more efficient. So if you look at, if you had in mind what the water desalination was 15 years ago, 15 kilowatt hour per cubic meter produced, today is 2.7. We're driving it to be 2 kilowatt hour per cubic meter produced. So of course that makes it much more environmentally friendly. We have reduced with real-time monitoring of the quality of the system, basically to reduce the use of chemicals to get to the exact specs to make it potable and that the utility requires from you. So even that is a very important point. We're working basically for zero brine, which is the discharge. But again, people think you're discharging only salt. In reality, for every, and Barbara is knowing much better, correct me if I'm wrong, but for every cubic meter that you produce, you're actually reinjecting the water stream. So the increase in salinity is relatively small. And basically you have these dispersion studies way out in the sea. It's literally you're putting a drop in a big sea. And so all these studies show that the concentration, the changing concentration of salinity is very limited. And here you have a picture of these corals. That's the experience in the Red Sea, which is really fabulous. So with a lot of corals. There's a lot of attention to that also. So, you know, it's not that you go in and you excavate and put your intake works, but basically you take the corals, you put them aside, you treat them well, and then you build all your facilities, you take it back and you put it where they belong, basically where they were before. So all these basically shows that as an activity is in line or even lower than any other human activity that is performed. Next, I think next is for Bart.
Thank you, Michael. And thank you for allowing us to talk about R&D and technology. Actually, during lunchtime, we were discussing with some of you CSP technology, batteries, redox flow batteries, electrolyzers. Now, I was telling myself in all my 30 years in the energy sector, in research, engineering, construction operations, it has never been more interesting than it is now. Because in our business, the transition which has happened is really to a large extent driven by new technologies. And it's also one of the reasons why I believe ACWA Power is successful, because introducing new technologies is really in the DNA of ACWA Power. From the very early days, the success in desalination was to a large extent the result of the choice of moving from one dominant technology into another technology, the membrane-based desalination, when all of the world was still using thermal desalination technologies, using more energy, therefore more expensive. And ACWA Power has been doing this quite consistently, and this has led to a certain number of landmark projects, which I think we have mentioned them all. The lowest tariff in solar PV, the highest efficiency or the lowest power consumption in desalination. We are now below 3 kilowatt hours for 1 cubic meter of water. 20 years ago, it would have been 20. Imagine the development and the innovation that is needed to bring the energy consumption of water desalination down by that extent. By the way, it's also a very strong contributor to sustainable development because this is real energy efficiency. Lowest desalination tariff, the largest PV CSP plant, which you have been visiting today, our project in the Red Sea, which is not only the largest storage PV storage autonomous project, it is actually the one plant in the world where we don't rely on the inertia of a large grid to maintain the stability. This is fully using power electronics and only power electronics in the inverters to make sure that we have a grid with a stable frequency first time ever. And other examples are there. The number of robots for robotic cleaning, which we use systematically on all our PV plants. not just robots, it's also equipped with sensing of the soiling of the PV panels, so machine learning algorithms to define which is the optimum cleaning frequency, and the use of remote sensing in order to optimize your overall performance. Just an example. So these things are really essential to the success. Was also last year, we were quite proud that it was recognized by Forbes, actually, in a kind of a comparison of companies within the Kingdom of Saudi Arabia. We came out fourth in our segment, which is energy and industry. And I think I can name the first three, which were Aramco, Sabic, and Ma'aden. We came just after them, being, I have to say, spending a little bit less on R&D than they do. So of course, this does not come automatically. You need to organize it. You need to prepare it. It is not sufficient to have a few clever people who invent something new on a new project, because you want to introduce new technologies at scale, but also taking an acceptable risk, not exposing yourself to whatever can happen when you introduce at scale new technologies. So we have organized, and we can go to the next slide. We have organized since a few years now a very much structured approach to innovation and R&D. We're really anticipate, call it the innovation roadmap. It looks at what we need to do to be prepared to deploy the best technologies, which will come to the market 3 to 5 years from now. It's not passive, it's an active development, but fully based on open innovation. Meaning we don't have closed research labs with hundreds of researchers. Every single project in our roadmap is done with partners. Partners can be national research labs, can be universities, KAUST, King Fahd University, many other universities elsewhere, can be startup companies, can be large industrial companies, leading companies in our sector. I can give many examples. And what we do is, with those partners, try to cover the last phases of the development cycle of such a technology. Because really often technologies, they stay a bit too long in the lab, and they are not brought efficiently to large-scale deployment in the field. That's where we can help. It's not just testing a new technology, it's really co-developing a new technology. So we've structured it in such a way it ends with pilot projects and demonstration projects, but before that there is co-development and collaborative R&D with the university labs, co-development with the startup companies, and fully focused on two things. Basically, one is operational performance, making sure that the technologies deliver what we expect and improving the output of the technologies. Second is competitiveness, because we operate in a competitive environment and we want to use these new technologies before others can, either because of the knowledge we have developed or because of the contractual arrangements we have been able to make around this collaborative research. 36 projects ongoing, and you see the different, it's still a little bit biased towards water and desalination, which we have the historical strength in research, and we're beefing up very rapidly. Renewables, already 25%. Digital technologies takes a big part of it. We do quite some work on AI, robotics, other digital technologies. Green gases, including hydrogen, with some demonstration projects, but also integration and hybridization. It's not only about the technology component itself. We built projects using different technology components. So the optimal way of integrating them, or the optimal way of proposing hybrid projects, like this one, where you combine 3 different technologies, is actually part of what gives us a distinctive competitive advantage. And then we do some work on other zero carbon technologies, very much focused these days on energy storage. That's a high-level overview. I'll be more than happy to spend days on every single topic, but I think this gives you a view on what we do, really to make sure that not only now we are successful in bringing new technologies to the market, but also next year and the year after.
Next is people. So we mentioned the priority that we have assigned to people. I will not spend a lot of time. I think in future updates we can go and drill down, but I think this is the scheme that we follow. So first is the attraction, which goes back to we need to grow, we need to position ourselves, we need to explain better, we need to become a better brand. The second is the onboarding and integrating. So we're spending a lot of time to make sure that once they come in, they get basically working effectively very soon. And there is a combination of both, the introduction into the system and the tools and the ability basically to make them usable, let me say, if you want to use this word, very soon. The next is developing and growing them, which I go back to the fact that I expect that we will lose people, because if you are the best, the people come to you to pick the best people. And so we need to really develop the talent pool. We have recently rolled out a number of different programs, and I would like to make a quick mention about them, which is probably in the next slide. The first one is the top 50 people in the company, basically below the MC level, the management committee. If you go to the next slide, is basically a program that we designed and are delivering with IMD in Lausanne. The second one, and it's a year-long, actually, more than a year-long program with integrated with coaching and mentoring. So it's very, very deep program. The second one is a program that is designed for the second tier that we developed with Hull University in the UK. And this is tailored basically to call it the CEO of the project companies and the project directors. So they're both the people who will develop the technical and commercial skills to manage construction, to oversee construction, and the stakeholder management and the relationship with all the financial off-taker and all the others, including all the people in the company, basically, of the project company. So this is the second project. The third project is another 50 people for the more junior people, more junior talent. We have rolled out a structured graduate development program with rotation for the people in different parts of the organization. And we're also sponsor of the Electricity and Water Academy here in Saudi Arabia and of Shirin College in Uzbekistan. Those are the first two schools where basically we graduate about 800 people every year. We don't take all of them, so we just simply want to feed the pipeline for the industry, because we believe that the more human capital you have, the better it is for you to basically select the best and attract the best. I was recently at the graduation ceremony of ACWA, and they told me that for these 600 people that they take on board every year, they receive 100,000 applications. So it's a very, very selective program. The last 2 years. We also launched one program tailored particularly at female. Our participation of female in the company is still very, very low. It's less than 10%. So that's a big focus that we have. It's an industry that starts with not a lot of female actually to start with. But I think the experience is that they are really probably the best contributors. So it's really something we want to foster more. And then, of course, we have programs for localization of talent in most of the countries, which follow the regular process and basically working with the rest of the ecosystem in the countries, basically to develop the local people. Next, and I think here we're going to autonomy.
Assalamu alaikum, good afternoon, everyone. So this session, to be honest, I want to make sure that you get the most of the team. I'm speaking with you on a quarterly basis on the earnings call, so I don't want to talk much on the financials. Mainly, I will leave the floor to my colleagues to give you more on the strategy, technology, and sessions. I know that will be also a heavy Q&A session. We have a lot of people joining us online. So really, I have 2.5 slides, I would say. One, a reflection of this year. One is on an outlook of what we have seen in the last 2 years since IPO, and one maybe just to give you a perspective on what we have achieved. So the first one really, now we are in December, we are closing the year. I think one of the great parameters that we have witnessed this year, to be honest, is the development side. The number of financial closes is just remarkable. We have closed, I would say, 12 coming up to be 13 financial closes, more than 60 billion Saudi riyal of financial closes, the best in the history of ACWA Power. If you go back in the last couple of years, you will see 6 to 7 was the best average. So almost we are doubling up from our best years. So that is definitely a good booster to the upcoming couple of years in terms of building projects. You know, a few years ago, it was 6 to 7 projects under construction. Now we have 20 projects under construction at the same time. So that is just remarkable in terms of boosting up our pipeline for the growth. In terms of number of assets, I think where we left you last year, it's more than 12 project additions. So that brought us to 80 assets. We have talked about the generation that has been added, but just a quick reflection also, 10 gigawatt means almost like 20% in 1 year in terms of growing the pipeline. So that also gives a bit of significance to the growth that has happened in a single year. On the water side, we have added around 1.4 million meter cube per day. That brought continue to let ACWA Power be the lead, I would say, company in the world when it comes to the water desalination. We are, by the way, very close to the largest government-owned desalination company. I think SWCC today is around 7.8 actual production, not installed capacity. So that's also give you a perspective that even in the next 12 to 14 months, we will definitely be the largest ever water company, both in public and private sector. Then in terms of competitiveness, I think it's also important to highlight, and you have seen it this year and last year, that before we were focused purely on competitive bidding projects. Today, we have both sides working together, both in the competitive bidding and on the negotiated deals. In the PIF pipeline that Marco has talked about, the initial stage, the projects are just getting larger and larger. All these are negotiated deals, but actually very large scale. So a few weeks ago, we closed PIF round 3, which is 4.5 gigawatt. Just to put it in perspective, you know, this whole solar park, Mohammed Garage Solar Park, is 5 gigawatt. So a single project is close to the full solar park, which is now already we are in phase 6 of it. So that gives you the level of scalability that we are talking about. And this is not the end of it, you know. So the 4.5 is also phase 3, PIF round 4 coming up even larger. And we are expecting to reach the Vision 2030 target. That number will go significantly higher. So scalability is something that you'll see even coming up bigger and bigger. In terms of numbers, I think we have lost a couple of competitive bids, but we are now back on track. I think both the negotiated and the competitive bid we have been doing fairly well. And we expect that we'll be more selective going forward, given the significant pipeline coming up in all the countries we are operating in. Maybe move to the next slide. I think it's just a highlight of a few things. So if I would like to highlight some, I think definitely the annual report is one of them. And this is important to you as well, that the team has really worked very hard internally, coordinating a lot of data from different sides of the company to bring a very high quality report, which is the annual report that we have shared with you. And this has actually has won some awards during the year 2023. A couple of others is water desalination. Taweelah definitely is a big one. Taweelah is the largest water desalination project we have ever built, and it's also the largest in the world. So that is now almost coming to full operation. Today is producing almost 90% of its capacity, and we are expecting it to be fully in operation in 2024. Other projects, definitely new green hydrogen is significant of a matter. I think if you look at the number of financial close we had, this is the heaviest one, $8.4 billion financial close for the new green hydrogen. Aside from that, also maybe we move to the next slide, where is a reflection of the 2 years, I would say, since the IPO. So if you look at our 1,000 page IPO prospectus, we talked about a couple of outlooks, right? And on this outlooks, I would like to also reflect on what we have achieved and what we have actually failed to achieve. The first one on the progress is growth. I think we were talking about certain pipeline of 10 gigawatts, we have definitely achieved much higher than what we expected in terms of 2 years growth. We have, when it comes to the power side, more than 37%, and the water around 10%. You're talking about very close to 20 gigawatts in 2 years. So that is definitely significant pipeline growth, and we have scored, I would say, better than what we have seen as an outlook. On the operating income, I think one of the statements we had in our mind that we will be doubling up our operating income in 2023, which is doubling from 2020. A few things happened here, but I think we are clearly behind this. We will expect operating income for 2023 to be much lower than that target. And while we have engaged with you in the last quarterly calls on the reason, but I would like also to re-emphasize here that there's a couple of reasons for that. If there is a pie chart, and I would like to cut it into 4 components, I would say one component of the pie chart will be the interest rate. I think back in the IPO time until today, the interest rate has increased triple. And for us, when we did the analysis, even 1% increase in the interest rate is around 140 million Saudi riyal impact to our bottom line. So just a reflection of that, it gives you the momentum of the operating income that we have lost on this aspect. The second pie chart I will look at it is really COVID-19 and the impact to projects under construction. So projects like this one, Tawila, and I would say Hasyan, and many others that was under construction at the time of the IPO, all of them have suffered from delays. Few of them have made it, I would say, as per the budget, but some of them have had a cost overrun. We have lost some revenue in this project, and this will contribute at least 1 quarter, or let's say 1 quarter of the impact to the operating income. The third element, I will really put it onto the development. So there has been a slowdown in the development at that time during COVID, and mainly 2 things, right? One is that delay on financial closes at that time, which has impacted our development fees, but also there was changes, or let's say we have closed certain projects, but at the time of the financial close, the hike of the interest rate, the delay in the execution, the higher margin of the EPC contractors has made us close deals that with a lower return than what we had anticipated originally. So that kind of positioning that we had due to COVID mainly, and the increase on supply chain costs has impacted us. I would say this will be the third, I would say, element to the difference in the operating income. The fourth one will be others. So all other buckets will be together, G&A costs, other costs that has been impacting us will be the fourth one. So this is in short the impact on the operating income and where we had lost it. If you visualize it, 2 of them is about timing. So I would say the development part, definitely we can get it back, most of it in the next 2 years. Interest rate, as you can outlook that the minute interest rates will go down, there is an automatic improvement in the operating income aside from the growth of the business. We are carrying today a higher cost of all the ideas that we have in our balance sheet. And the other 2, I think it's something that we have to recover with the growth. Not that I think you can recover the cost overrun and others, except if you do a refinancing of this project in a couple of years. Equity commitment, we had done fantastically better than what we expected. So we said 1.1 to 1.3. I think this year outlook is around 1.5. And then we are expecting at least 1.6 billion equity investment in the next 6 years on average. When it comes to net debt to POCF, I will not spend much time here because I already explained the impact on the operating income. But really, the main thing aside from that is actually the growth. So definitely with faster growth, our equity commitment will be higher, so we will be more leveraged. So there will be a timing impact of, let's say, 1 to 2 years when we're expecting higher net debt to POCF compared to our, let's say, comfort zone of around 6x. When it comes to dividends, we did mention 3 years expectation of dividends with 6 to 9% growth. So that would we have delivered on that. So the first 2 years has been completed, and we're expecting for 2023 to be also on track, subject to the board approval. Decarbonization, we have done actually even better than what we expected. Whatever we have committed as a 2030 target, we are very close to it. So today we are 45, I guess 50% target for 2023. And in terms of reduction of our carbon footprint, we have talked about a couple of examples like Shaiba IWP, Hasdian, moving away from projects in Vietnam, which is the coal project, and also working together with our off-takers to decarbonize the remaining heavy crude oil assets. I think this is more or less all from the finance. I'm sure there's a lot of questions which we'll go through in the Q&A. That may be a closing remark.
Yeah,
Marco.
Yeah, this is just to bring it all together, what we mentioned to you. I think that the first point of one of the reasons for success is scale as a differentiator, and that's why I say that being a Saudi company and the Vision 2030, everything that is going on here positions us to have a really great, unique relationship with other countries and with suppliers that we can leverage. The innovation that Bart described in all the technologies and that we continue to pursue. I come from Europe and utility background. We're always kind of like a fast adopter. Here we are the first adopter. And so that's one of the biggest things that makes us very competitive. And I think I will not spend a lot more time on all these. I mean, I think we covered everything, but the last point that we didn't maybe touch too much, but Abdulhamid mentioned all the financial closes we're doing. The fact that we're able to reach all these, close all these project financing and then find partners on the equity, allow us to mobilize $10 for every dollar that we invest ourselves. And I think that is what creates and really accelerates the growth potential, despite if you compare us, with the Aramco and SABIC smaller dimension, the ability to grow so much and to do so much more. So with this, I leave it to Oscar for the Q&A.
Thank you, Marco, and thank you everyone for excellent coverage. Now, I think we're opening the forum for Q&A. And Zach, how are we managing the Q&A, the virtual ones, here? Say again? Why don't you come over here?
You can take one point.
Yeah.
I see there was one question already there.
We will take questions from people here first, and then the virtual ones, audio call questions will follow.
Yeah, there's one question on the virtual platform. Maybe you can take it first, and then we can clear it out.
Yeah.
Who's reading the question?
Yeah, I'll read it out. Can you speak about your battery storage plans attached to wind and solar? Are you buying batteries, installing systems yourself, or partnering with other companies for the complete solution? And the third part of the question is, are you working with Chinese suppliers here? And is there differentiation in battery storage solutions in the marketplace? What do you expect will happen in the storage space? Okay, thank you. That's an interesting set of questions, but on a very relevant topic. So first, correct. It is correct to say that more and more large-scale renewables projects will be combined with battery storage. And the reason is grid integration, to make it possible for these very large projects. When you talk about 1,000 megawatt wind in Kazakhstan, or many hundreds of megawatts, often in relatively weak grids, you basically need to combine it with batteries to avoid the fast ramping up and ramping down, which would otherwise cause problems, stability problems in the grid. So there, the off-taker will just prescribe a certain amount of battery storage, and it is combined. You cannot do the renewables project if you don't do the storage. Then, there are also many places in the world where with increasing renewables, increasing use of renewables, there is a need for storage or other solutions for when there is no wind or no sun. And that leads to a demand for storage. There are many places where we work where that could be like pumped hydro, but there are also other places where large-scale batteries are a good solution. And that will likely go into an IPP framework, which is the one we use for our renewables projects. There is a tender to come in Abu Dhabi soon. There may be others to come in the countries in which we operate. So without putting a target on it, very clearly, this is purely part of what we will do. We have a very good position. We have the knowledge. We have demonstrated that it's possible. So how do we proceed? In much the same way as we do a solar PV project. Meaning, we basically define the requirements for the batteries. We do the vendor qualification. We select the best vendors for every project. We negotiate the conditions. But then we still go to a specialized EPC contractor who wraps it all up from a contractual point of view, so who takes the overall construction responsibility, but also who does kind of the integration between the different parts of the project. Again, that is much similar to what we would do for a solar PV project. Suppliers these days, on all the projects we have worked on, were Chinese indeed. And if you look at the scale of the battery supply market and the different parts of it, so cells, battery packages, and then integrated battery containers, because it's all of that. China is such a size that you have the same effect of having the best prices and a very good price quality ratio. So I expect that actually to remain with maybe localization like we see it now in solar. Localization not starting with the cells, but starting with the containers and then gradually moving back upstream in the value chain. But that will take some time. We do see prices going down. I think that was also part of how do you see the evolution. We do see prices continue to go down because of scale effect in the supply chain, and there is still quite some room for technology optimization. I mean, there's clearly a choice for lithium-ion as the dominant family of technologies, but within that family, there is still a lot of room for improvement. And then there are some alternatives to lithium-ion which are being prepared in the lab. So for at least 10 years, there is room for further cost reductions in battery. And maybe at some point, you know, today the battery market is still very much a little bit piggybacking on batteries for electrical vehicles. Large-scale storage projects are not the same battery packs, but the same cells as those which go into the battery packs for your electrical vehicle. As long as that remains, as long as electrical vehicle market will be as large as it is now and growing at the pace it grows now, we will continue to probably use the same technology. Then at some point, there will be a bifurcation and we will have specific technologies for stationary storage like the projects we do. I don't expect that to happen in the next few years.
Thank you, Bart. Any questions from here?
Yeah, Meyer from Arcom. You alluded to your fact that net debt to POCF will reach over 7 next year, which is well above the 5 to 6 target. How do you see this progressing to the 6 handle? Is that organic, thanks to the EBITDA growth that you forecast? And does that take into account the new CapEx plans you have? Secondly, on the back of that, obviously, interest rates have moved much higher than ever anyone would have expected, right? At the same time, your cost of equity is much lower. So is there a rethink of, let's say, why not raise a bit of equity to kind of, improve these ratios going forward? given that the cost of capital has kind of moved the opposite ways? And also, are you planning to improve your financial disclosure to kind of provide more look-through leverage? Because obviously in the SPVs, I think there's a 1-to-3 ratios as well. Right, so to provide that look-through basis would actually be helpful in terms of interest coverage or ratios that are relevant actually for financial investors. Yeah.
Thank you very much for the question. So maybe let's take it one by one. When it comes to the growth, right? So we are expecting now on average for the next 7 years, $1.6 billion of equity commitment for that $250 billion of portfolio to be achieved by 2030. So you are definitely right that this cannot be achieved with debt only, and we have certain parameters and we have to maintain our ratio on checks. So an equity raise is definitely required between now and 2030. So I would expect that for the next 7 years, if it's not once, it will be twice capital increase for us to achieve the $250 billion kind of portfolio while maintaining our ratios on check. In terms of timing of this capital raise, of course, these are subject to shareholders' approval, board approval, and timing is a percentage of an asset. So we will come to the market in the right time, and we will go with this, I would say, capital increase. Definitely, other instruments remain attractive too for us, including debt issuance. We did Sukuk issuance earlier this year, and we will also continue to look at it as a different pool of liquidity in the next 2 to 3 years as well. In terms of where do we see the net debt to POCF as a guidance, I think 5 to 6 remain low for such a growth requirements. I would say between 6 and 7. While yeah, it will go above around 7.5, 7 to 7.5 maybe in 2023 if we continue that growth and without a capital increase. But ultimately, when you do a capital increase, it will go down not to 6 or 5, it will go down much lower, right? And then from there, it starts going up again as you are growing your portfolio. So that is the way I foresee the outlook for the company in the next few years. Timing, I think, yes, maybe the market today is attractive and to use, I would say, the share price as a currency for growth. You are absolutely right, but of course, this is subject to a wider discussion at the board and to see the right time for such a target, I would say. In terms of additional ratios to be disclosed, I think more or less we are providing a big number of ratios together with the financials, but ultimately, as a guidance, we are prepared to consolidate and keep it limited. So for our financial partners, which are the lenders, we are keeping 2 ratios at max for them. And this is mainly for the, say, bond holders and also the senior lenders in ACWA Power balance sheet. But for investors, definitely we will maintain the ones that we are disclosing in I would say, quarterly basis. The rest, I think it can be worked out. It's not really something magical, I think. By the quarterly analysis that we are showing in the market, everyone can work out any ratios that they have in mind. We don't foresee or we don't see that we are required to put it under earnings call on a quarterly basis. But in terms of, I would say, improvements into what we are presenting on a quarterly basis, one of the feedbacks that we continue to receive is that the outlook, financial investors would like to see more of the outlook. So what we are trying to do, and you have previously saw it last quarter, is that we're trying to put more information related to outlook, including what I have just mentioned in the last couple of minutes, where I disclose more about what we are seeing as an outlook. We are still not there yet when it comes to disclosing target net income, target operating income for 2024. But I see ourselves gradually moving into that direction where we can give a guidance to the market for a 12-month rolling kind of targets.
Yeah, we have a question on the audio from Ricardo. Ricardo, go ahead.
Hi, thanks for taking my question. A few questions here. The first one, we're quite vocal about the potential of the Chinese market. So would you mind just comment on how do you see returns there, especially compared to Saudi Arabia? The second question is on water desalination. And you also mentioned on how much investments have you been directly to water desalination technologies. So what's the potential that you see for further declines in desalination tariffs in upcoming bids? And then third, just following up on the previous question from my colleague, and you mentioned about potential capital raising in the future. Within this framework of a massive pipeline that you have and the current interest rates, would it make sense to not pay dividends for a few years, or would you be willing to keep on paying dividends in the medium term until 2030? Thank you.
Okay. So in terms of returns in China, what we see preliminarily, we're just entering, so we're starting to look at opportunities. We see that they are in line or marginally better than what we see in the Gulf, which confirms the attractiveness of the market. In terms of water tariffs, it is defined mainly by three things. So the capex, the energy cost, and the efficiency. The efficiency, I mentioned that we continue to drive it down over time, so that will be positive. The energy cost, I think it has more or less bottomed out with the higher interest rates, and it depends country by country. So if you go to Morocco or Senegal or Egypt, of course, it's different than Saudi Arabia and the Emirates. But all in all, we think that there is still room for improving for each country. In the CapEx, we continue to become more efficient. We have ideas that sometimes are redundancies in the system that we're negotiating with the off-taker, whether you want a lower tariff or some backup in your plant. So those are all things that we continue to improve. And in terms of the dividend, we took a commitment at the IPO, and so we intend to meet that. Then, of course, going forward, we will look at all the sources also of financing and the returns that we can get for the financing. So, of course, we reflect also the interest of shareholders, but I think, as Abdulhamid mentioned, this is a growth stock, not really a yield stock. So I think that the first 3 years were important to provide the reassurance, and say, and to build the credibility in what we do. But I think that now we're increasingly demonstrated that we can grow, and the growth is attractive, and so we should capture the opportunity. So we'll keep all the options open.
Okay, any other questions from the floor here?
Thank you, gentlemen. Anna Tanal from JP Morgan. Two questions from our side. First, on broad strokes, I understand that you cannot provide a lot of detail, but you mentioned that you're aiming to triple asset under management by 2030. My question is, how should we think about this growth in terms of like gigawatts? If I kind of proportionate this amount, that means that ACWA Power by 2030 would be a 150 gigawatt project company. That's the first thing. And then secondly, if you could maybe shed some light on how you see the future growth evolving across your main pockets, like renewables versus water desalination versus green hydrogen projects. So what kind of share of future growth will be dedicated when you see them targeting at each of these segments? It would just be very helpful in just structuring how we should think about the growth and the vectors and the shares of relative technologies in your portfolio going forward, how you think about them. Thank you.
Yeah, let me take these, and unfortunately, I need to join another board shortly, so this will be my last question. Then I leave it to the team. As I mentioned, we prefer not to give the exact split because it depends on what the evolution will be. Of course, right now you see there's a huge amount of renewables and some combined cycles also. So I think the short term that will be the bulk of the growth. And then water is depending on the industry. We are looking at opportunities basically from Morocco to Indonesia and China. I think that we have a potential basically in all the technologies to grow, if not proportionally to the total number, but certainly it can be in line.
We have an audio question from Oliver.
See you.
Go ahead, Oliver.
Thank you all for the presentation. Two questions, if I can, just on some of the financial targets again. So, the first one, you talked through obviously the delta between your expectation on 2023 versus 2020. You also had a target, I believe, in 2027 of sort of tripling earnings at the time of the IPO. Just wondering sort of where you see that 2027 number now. And then also for 2030, if we were just to think about the earnings growth, you know, from here, you know, the tripling of the AUM, you know, is probably about 20%, 21% CAGR. Is that the sort of rate of growth of earnings we should be expecting through the second half of the decade? And then the other question is just on returns, because we didn't really talk about this, but obviously at the time of the IPO, you know, you had a hurdle rate of 15%, I believe, return on equity. You know, I think it's fair to say that's probably come down a little bit given the rates environment. Could you perhaps sort of articulate where you see returns now for the project pipeline as you execute that? Thank you.
Thank you, Oliver. I think given what we have seen in the last 2 years, it gave us really a reflection that we cannot give a number beyond 12 months. So definitely giving a number by 2027 is going to be very challenging. No? So I will, to be honest, not comment on a reflection or expectation of 2027, but definitely what you have seen in terms of pipeline can give you an indicator on the expectation for 2027. So that is on the growth. We will, as I mentioned earlier, I think we are now discussing internally where we can give more of a guidance, 12 months rolling guidance. This is something that we are still discussing internally, and we'll see how best we can start this rolling out. We started last quarter by giving a visibility on active projects that we are working on, and definitely in the last 2 years, as we have a pipeline of negotiated deals together with the bidding, it will give us more visibility in terms of the growth momentum of ACWA Power. Now, when it comes to returns, we have not changed, I would say, our model of expectation. I think what we have expected or what we have seen earlier, which is a mid-teen kind of IRR on a portfolio basis, will continue to be the case. If you have seen definitely projects outside of Saudi and UAE, which is in Central Asia, are giving you higher return, giving the higher cost of equity definitely there, compared to projects that we are working, say, in Saudi and UAE. Water is giving you definitely better return than single PV projects or I would say renewable projects. On a portfolio basis, we are expecting the same kind of return that we have given as a guideline earlier. And this is despite the fact that you rightly mentioned about the higher increase on the interest rate, which is mainly covered on the tariff that we are structuring these projects. So you have seen while we have reached a level of, let's say, 1.1 or 1.2 cents per kilowatt hour project pre-COVID, or let's say at the time that the interest rate was low. Today, the same project we closed at 1.6 to 1.7 cents. And this is mainly because of the increase of the interest rate. So definitely increasing the interest rate will not eat from our return, but rather will keep the same margin that we had originally assumed. I think these are the 2 points. Oliver, did I cover your points, or you have more questions?
No, that's fine for now. Thank you.
Thank you.
Any questions from the floor here?
Yeah.
Assalamu alaikum. This is Amr from Noor. Regarding the people programs, I saw 2 programs, one top 50 under the committee, under the management committee, and another program with the whole university. So I want to ask about the process of choosing the people. Is it a nomination based or is it an application based, and the application is assessed? And how is the process done?
I I'm sorry, but I know this is more of an internal one. We can take this later on, but I would like to open it up for investor-related questions. Thank you.
Thank you. It's Asif Karamani from ACWA. Keeping it away from the financial projections, how do you think about the competitive environment for your growth plans within the region as well as in China or other new regions that you're going into in Central Asia? And then the second question is, how do you think about technology innovation in the sectors where you're operating? You talked a lot about reducing cost of production in the various sectors. But how do you think about the company playing a role in evolving or revolutionary new technologies in the renewable space?
So perhaps I take the first question, and then maybe anyone would like to add on. So when you look at the competitive environment within GCC, you have seen that a couple of years ago, when you have bids, you'll see a margin difference between the first and second bidder, or second and third, like bid around 18 to 20% margin. But today, that has really shrunk down. First, because the number of bidders has increased significantly, and also when it comes to mainly EV or wind, you will see that it's very tight competition. So it's almost 2 to 3% difference between the first time bidder and the second one. So that has really made the market more and more competitive, and that's why also fairly simple technologies will have more bidders coming up, and then also lower returns compared to a more complex project like CCGT or water desal. When you go abroad, depending on the countries that you're in, you will see this a number of bidders, but definitely the competitive landscape is still high. So that you will see also the margin difference in that go above 10% between the first and last bidder. That's at least what I have seen in the last 2 years. Maybe I will leave it also to my colleagues, Thomas and Bart, if they would like to add more of this one. And then second question for you.
And we have a written question here submitted by Andrew Edmondson, who asked, please discuss what...
I think you have to differentiate about what technology you're looking at and what market you're also looking at. So it's clear that if you look at the last few years, it's been very, very competitive globally and basically across technologies. And I think now you've seen a period of time where some have also been facing the consequences of interest rates increasing. You've had supply chain bottlenecks. So the way I look at it, when we look a bit ahead, actually, I think it plays to our strengths that we have now the volume, that we also have basically the relationship with the EPC suppliers, that we can get the attention, not only from the OEMs, but actually also from the EPC providers. And that goes well for what we are looking at. When it comes to PV, when it comes to wind, it is a bit more plain vanilla. So of course, competition is pretty hard. So sometimes you have to be a bit patient, wait for the right projects, and some are a better place for you as a company. When it comes to green hydrogen, when it comes to water, it's a bit different. It's newer technologies where you can have absolutely benefits from your technology capabilities, from your track record, and of course we are tapping into that expertise. So we're trying to sort of combine that. As we heard earlier, you need to play, of course, also in the more mainstream renewable generation. That's very much a scale game. The others is basically take position and basically be a bit ahead of the curve. So I think we are well positioned, but competition is here to stay, of course.
So one point to add, which is not new, but relevant for the most competitive, which is renewables, solar and wind. One of the distinctive competitive advantages is scale. And scale is about procurement. And that's why we're actually moving now. We've reached the scale. We buy like 15 gigawatts of solar modules every year. The largest PV supplier in the world today has an output of 90 gigawatts. So it's relevant volumes we buy, and that is where we get the competitive advantage from those highly competitive markets. So we buy by pooling everything together with framework agreements, which we didn't do in the past because we didn't have the volume. Now let me try to answer the technology innovation question. it's absolutely relevant. So clearly what we do is not just incremental innovation trying to get the price a little bit down. There is still quite a lot of room for disruptive innovation in our sectors in general. But it's not the same for the different businesses. And I have to stay a little bit at high level because we don't have the time to cut it up in very small pieces. But if you look at desalination, we're more or less reaching the end of the progress you can do with membrane-based technologies. It's improving every year, but there is the law of diminishing returns, and at some point the progress becomes smaller and smaller. We're there. We're still optimizing. We're doing things like improved operations thanks to artificial intelligence algorithms, reducing some of the fouling, these kind of things, but the room for improvement becomes smaller and smaller. But there are disruptive technologies still on the horizon. We're actually working on 2 of them with collaboration agreements. If it works, and that is not certain yet, it will give us a significant competitive advantage. We have secured some exclusivities around this if it works. But I cannot make a prediction. That's the way it works in innovation. You work on it. Some of them succeed, some don't. Now, then combined cycles, thermal. It's a bit similar. The current technology, the gas turbine technology, we're not increasing that much anymore the performance. So there's a competition based on how efficient you are in building a project. It's not that much technology driven. After all, it's your gas turbine supplier who defines the competitiveness of the technology. We're not developing gas turbines. That is for the GEs, Mitsubishis, and Siemenses of the world. We work with them, but they will develop it. Then in renewables, there's still a lot of room to improve, purely technologically speaking. Just want to take the example of solar. We've moved, the entire industry has moved from P-type to N-type silicon with an efficiency advantage as a result. This is now becoming the standard, deployed worldwide. Very soon, the industry will move to tandem cells, where 2 different junctions are combined to get an even better performance. When this will happen, nobody can predict, but that it will happen, likely to happen, absolutely sure. Because simply the entire industry is working towards it, and there's no fundamental physical threshold. But I expect most of the progress still to come is in hydrogen. We're only at the beginning, basically. We're only seeing the very first large-scale projects, and we're using a pretty old technology, which is reliable, alkaline electrolyzers. There are alternatives. There's still a lot of room to optimize, so I do believe that going forward, you will see actually even disruptive innovation in the sense that the core technology we use now, alkaline electrolyzers, maybe in our projects 2-3 years from now, we would be using something else.
Thank you, Bart. We've got 2 written questions, and then I think we should close after that. Harry, if you could read them out.
Certainly, our first written question here from Andrew Edmondson of Ashmore Investment Management asks, please discuss what you are seeing in terms of cost inflation in renewable project implementation. As you say, we should see cost reduction in BESS for some year, but it feels like EV in particular has bottomed out. How much potential is there for further unit and construction cost reduction, excluding increased financing costs?
The cost of a PV project is less and less determined by the cost of the PV module. There used to be a time when the PV module would be like 50 to 80% of your cost of the project. Now it's, I'm speaking in general terms, it's not our specific numbers, but it's more like 25% only. So even if the cost of the module will go down slower and slower compared to what it was in the past, there are still many other levers for optimizing the cost of an overall solar project. These are the trackers, these are the inverters, these are the cleaning robots, these are optimal siting methodologies. So yes, maybe the module cost going down will go slower and slower, but the efficiency will continue to increase. Balance of plant cost will continue to go down, and there are still many other papers. That's my view.
Thank you. And our next question, Robin Fiedler of Cavalis Capital.
Let me add maybe a few points on this one. So I think also the scale of the project will also play a role in this one. So if it's a project of 4 gigawatts compared to 300 megawatts, the panels cost as a percentage of the project cost will depreciate a bit. And to link it also to the question, while we have this project with a long-term offtake, I would say between 25 to 35 years, that evolution of technology does help us on the refinancing aspect. So I can give you an example. For example, if there is a project that we are currently operating for a couple of years, maybe the first term or the second term of refinancing that project will include a replacement of the panels, increasing and upsizing the project. So we can definitely, within the same land, develop the capacity and build a case as long as it is aligned also with the off-taker requirement of growth and the sizing of the rest of the equipment, including the high voltage transformers and the grid to that specific size. So while we have kind of locked our tariff for this project, there is instance that currently we are negotiating with the off-taker on potential refinancing opportunities, capitalizing on the evolution of the technology in the last couple of years. Yeah, I can go to the next question.
Great, thank you. Our next question from Robin Fiedler of Cavalis Capital is, for NEOM, when will the bulk of Nucera electrolyzers be ordered and tested at the project? 2025, or will that start in 2024?
I can also take this one. So for the Neon Green Hydrogen Company project, the one which was presented here, everything has been ordered, to be clear. The first electrolyzer is actually already on site, but not yet installed, and will be part of an initial innovation setup and kind of an R&D setup where we will have a year and a half to really, I would say, play with the electrolyzer, but it's really about learning how to optimally commission the electrolyzer before we have to do at Hydrogen the 110 electrolyzers for the main project, and the project remains on schedule.
Thank you, Bart. I guess that's the last question that we have. Yeah, just time for one more question from the floor. Anyone?
So in terms of miss for 2023, am I right in assuming, obviously you didn't want to reconfirm your long-term targets, which I respect given uncertainties, but to understand the 2023 miss, so assuming that, I think am I right, assuming that half of it will be recovered, perhaps already next year? Is that optimistic? And half of it was more or less half is timing, half was structural costs like cost of around the interest rates, basically. And to rephrase that, what was the IRR cash to cash on your CapEx that you put in place? Obviously, the 50% was the target, but how much is it reduced because of the structural factors, interest rates and cost of overruns? Thank you.
So I think when you look at 2023, we have already announced, let's say, the Q3 numbers. So 9 months is already there. So you are left with only 3 months, which is closing in the next couple of weeks. What we are maybe already announcing, and we had it already part of the earnings call continuously, is that the targets mentioned in the IPO of doubling up the operating income of 2023 will not happen, definitely. So that is the miss that I just explained the details of the breakdown there. So it will be difficult to break down the IRR perspective from these specific projects, and the reason for that is fairly simple. We have today around 70 projects that is committed. The project that has been impacted by COVID is around 7 to 8, right? So that specific project, yes, some of them has reduced their cash and cash out, I would say, IRR, but others also has outperformed, and some others maintain the same. So the mix is difficult to give you a number of how much is impact there. But what I would say is that within that the state impact is around 1/4 I mentioned earlier. So that is something that we are expecting to recover, but not immediately. So I will wait for the interest rate to go down, and whenever the interest rate go down, this is definitely on the existing portfolio. This is improvement on the operating income. So as I mentioned, this year, for example, a 1% increase in the interest rate, that's 150, but it increased more than 1%. So if you say 2%, that's 300 million riyal. And 300 million riyal is almost, talk about 20% of the bottom line of last year. So that is significant. And the unhedged position, while we are maintaining a very solid hedging strategy, where more than 70% of our portfolio is hedged, the remaining 30% or less, that is the impact. So you can imagine if you have a more unhedged position, how much is the impact? Definitely, as we meet on a monthly basis for the hedging committee, we always look at the right opportunities to continue hedging the position. The good news is that most of these projects that we just announced, which is 11 financial close, all of them, the minute we secure it, we hedge it, and the pricing of the hedge is already included in the IRR that we have built in. So the number of projects is just getting smaller and smaller when it comes to the project that has been impacted. When it comes to next year outlook, I think this is something that we will come to the market at a later stage and give more insight of what we are expecting in 2024.
So I have a question about the NEOM green hydrogen project. So obviously the green ammonia and green hydrogen is, as a market, is still nascent and new in nature. And it's difficult to kind of predict the pricing over there, especially if it's in the medium term. How has this been taken into consideration when structuring the agreement with Air Products, or sort of to ensure the profitability for ACWA Power and remain within the IRR threshold? That's one question. The other question is more general as to what are the expected risks that ACWA Power is expected to face, or maybe could face over the coming 5 to 10 years.
So on the first question, as far as offtake price is concerned, I think that was effectively set with our offtaker and products. There's casting installed as part of the offtake agreement, and that is the basis on which the project economists that have been project financed have been established. So that effectively needs to meet certain DSCR debt service coverage ratios and the minimum equity returns expected by the founder. So it's not like a market driven, but it's not rather a cost plus kind of driven structure to get to what is the offtake price. So the second question I couldn't get it, sorry. So.
Thank you. So maybe just to complement the last point, we have also mentioned a couple of earnings calls that NEOM green hydrogen project is for us is a first move advantage strategy for us in the green hydrogen. So our return as ACWA Power is definitely lower than our average, let's say, IRR that we take on other technologies. So this is something that you should be aware of, and it's only the first project. So definitely, when Marco talked about our second project, which is happening now in Uzbekistan for the green hydrogen, the returns is like on track to the average IRR you usually look at in other technologies. When it comes to risk, I think, look, there is a couple of risks that we are seeing as a challenge for ACWA Power going forward. Definitely, the first one is the people risk. Marco did highlight a bit on how we are doing and creating a people strategy and focusing on how can we develop our own people and building on that, because with the growth coming up, we will need a lot of people who understand the business and understand ACWA Power DNA to help us grow the portfolio. So that is the first risk that we are working on it. And definitely the second one will be execution risk. Today, as I mentioned earlier, we moved from 7 to 20 projects under construction. project and infrastructure require a significant amount of focus because once the plant is up and running, then it will be almost 80% of the risk is already made because the cost overrun risk is done, the execution risk is completed, the plant has passed the commissioning phase, which is usually a bit challenging period for the project, and then it's more of a normal operation where we are a bit comfortable with having the market fully on board from day one of these projects. Execution risk is definitely a second highest that we are seeing. Continuous interest rate at this high level will also be a challenge for legacy projects. As I mentioned earlier, for new projects, we are not worried because as we are developing these projects, we are locking our projects and almost these projects for the next 4 to 5 years are hedged. If it's not 95, it's 90% during execution. The minute it comes from execution to operation, this hedging ratio will go down to let's say average of 70 to 75. So the current project under execution, we are not carrying an interest rate risk, but the previous projects, these projects are impacted by the interest rate if it's continued that high. The minute it goes down for a while, we do actually hedge our portfolio almost fully. So I remember 4 years ago when the interest rate went down, we almost get to a level of 95% hedged of all the portfolio. So we capitalize on these opportunities, but given the market, for example, for the real, it does not give you more than 7 years hedge. So you ultimately cannot hedge for longer. And for the dollar, we capture the opportunities as they become available. These are the three main, I think, from my side. I don't know my colleagues if they would have. Yeah, Thomas, please.
No, I just wanted to add, of course, execution risk is huge, but I think you should not underestimate the need for also having a very, very strong relationship with your suppliers. And we've seen, just back to earlier point, that there's been more demand than there's supply right now. And that, of course, something we need to manage very, very carefully, also just from a concentration risk perspective. So that is one, and of course, part is also on top of that, but that's one we are really, really focused on. Then I would also say that we are now also expanding a bit more, if not globally, then pan-regionally. And of course, there are more markets we are now playing in. So when you're growing in more markets, of course, you also need to pay attention to different regimes, if you will. So it's all the classic things. It's permitting risk, it's the political risk, those kind of things that we, of course, pay attention to when you start to move a bit away from your existing footprint markets.
Thank you. So to you.
I think it's time to close down. Thank you, everyone. Literally everyone in the room, everyone on their screens, and also our management team. It was wonderful to hear all of your views. And any questions, any further insights that you would like to build on today, or anything else, you know how to reach investor relations, most of you. So seriously, thank you so much for a long day. I hope it was worthwhile. Thank you.